Credit union versus commercial bank CDs. Where to buy a certificate of deposit is mostly a matter of personal preference. If you are shopping around for a certificate of deposit (CD), there are many options available to you. Hundreds of institutions offer CDs, from your tiny local credit union to huge multinational banks. The good news is that there is no essential difference between the CD they typically offer, although interest rate can vary substantially from one individual institution to another. In this article, we will look at how CDs work at both banks and credit unions and help you decide which type of institution is right for you. Typical certificate of deposit work the same way, whether they are insured by a commercial bank or a credit union. When you take out a CD, you commit to leaving your money in the account for a set period of time. In exchange, the issuer will generally pay you a higher rate of interest than it offers on its standard saving account. If you need to get your money out before the end of the CD's term, you will often incur an early withdrawal penalty, sometimes a substantial one. CD are among the safest investment available. One reason is that the bank or credit union guarantees the interest rate it promised you when you sign up. Another is that most CD are federally insured. The Federal Deposit Insurance Corporation (FDIC) provides insurance for most banks, and the National Credit Union Administration (NCUA) provides it for most credit unions. When you open a CD with an FDIC or NCUA insured institution, up to $250,000 of your money on deposit with that institution is protected by the U.S. government, even if that institution were to fail. In addition to bank and credit unions, you can also buy CD from brokerage firm or independent sales representative. These are known as brokerage CD. One major difference between brokerage CD and other type is that brokerage CD often trade on the secondary market, making it possible to sell your CD before its term is up if you need to. But beware, as brokerage CD are not always FDIC insured. Credit union versus commercial banks. Though CD work in the same basic way whether they are issued by banks or credit unions, some people prefer one type of institution over the other. There are a number of reasons for this. Credit unions tend to have lower fees and better interest rate on saving account and loans. Banks' mobile apps and online technology tend to be more advanced. Banks often have more branches and ATMs nationwide. Some credit unions, however, participate in the Co-op Shared Branch Network, which allows their customers to do business at some 5,600 physical locations and more than 30,000 surcharge-free ATMs. Credit unions have a reputation for providing more personalized customer service, while large banks tend to have stricter rules and may have less flexibility in decision making. When it comes to CD, the interest rate offered by different institutions are so variable that it's impossible to say that either banks or credit unions offer higher rate. That's why it can be a mistake to just open a CD at the bank or credit union where you already have other accounts without investigating how its rate compare with those you can earn elsewhere. Before the internet, your CD choices were essentially limited to what you could find in your community. But with the proliferation of online banks and traditional banks with online portals, the number of CD you can consider is astounding. For example, Investopedia's list of bank best CD rate is based on about 200 banks that accept customers nationwide. Which is better, a commercial bank or a credit union? It depends on your personal preferences. In terms of CD, the interest rate paid by banks and credit unions as a group tend to be similar, although they can vary from one institution to another. Are bank and credit union CDs safe? Yes, if they are federally insured, as most cities are. When you open a CD with an FDIC or NCUA insured institution, up to $250,000 of your money at that institution is protected by the U.S. government. Thank you.